Welcome back, everyone, to Profluent Sports. Got an awesome one today with Eberg Capital and the man himself, Roger. So appreciate you hopping on. Long time coming, and a lot of people excited for this one. So excited to dive in.
Thanks so much, Andrew. It's great to be here, man.
We'll make sure some people, I know we got some Ohio State fans, so we'll make sure some of you just keep your video off if you don't want to see the team up north. But other than that, off to a good start.
We're always representing.
Got to. So let's start here. Really, the conversation begun around, put out a post on LinkedIn just with some of the deals we had done of people going to lead rounds, signing term sheets, and then not, and this is all happening in sports. And then when it comes to wire money, we don't know where it is, we don't have it. And seen this happen quite a few times in sports. And I don't think that really happens. I'm sure it happens in other industries, but you being in tech before, you talked about lack of professionalism and some stuff. So I just want to start there of what you've seen as you've come into the sports world and started making more investments and diving deeper into it.
Yeah, thanks, Andrew. It's actually been shocking to me. I really started in this area. I left IA about 4 years ago, but really started investing kind of professionally in the sports media entertainment space about, call it 3 years ago. And I looked around and I'm like, there's really almost nobody kind of like me in this space at the very early stage where, I've had a whole career of being a professional technology investor, but the key thing being professional. I found it was totally both angel dominated, but even the smaller institutions, not the same level of professionalism that I was accustomed to in tech. And what that meant is that it was like herding cats. In order to get people to fulfill obligations, you would see people fade away at the 11th hour. And, my style's always been to lead rounds, have hyper clarity, be a truth teller. If there were issues, they would be raised pre-term sheet. It's like once you go to term sheet and you've done the work necessary to be comfortable issuing a term sheet, then you're building a partnership. And so I really have found this shockingly similar to the way New York tech was in 2005. So literally 20 years ago, when, the notion of emerging managers and the space between angels and, full-on Series A institutional venture was still nascent. But there was a lot of this kind of bad behavior and more like debt-like, non-aligned terms with founders. And so coming here, I've seen a lot of the same thing, and I'm excited to hopefully be a positive catalyst for change.
On that, I'm curious, you mentioned at the beginning about the early stage side. We're seeing, especially now, a ton. I mean, every week it feels like, and again, these are just sort of announcements. They're not closed funds, but every week it feels like, $1 billion late stage fund, $1 billion new whatever coming and going. It's like every week, right? And this has been for the last 3 years. We've seen it. And a lot of people are like, where is this capital? It's like, well, those are just sort of press announcements to get some, hopefully, buzz. But I don't know. I don't know how well they work or don't work. But, why pick the earlier stage side? Like what in sports as you started to look into it? And I know you've done it, we can expand that too. Maybe you can do that from betting and gaming. And there's more than just sports. But, why go to the early stage side and what excites you about it?
So, for the past 20 years, this is really where I've been focused, is on really company building and partnering deeply with founders, pre-product market fit, working with them to see, is there a really big, great company inside of here? And if so, let's get it appropriately capitalized, get the right people on board and build the business. To me, there's nothing more exciting than empowering founders to do great things. And at the earliest stages, when I get to be part of the process in helping them to find their lane and find their voice and build the confidence to be like, you know what, I'm going all in on this. And this is the thing that's going to make my dent in the universe. There's nothing better than that. I'm sorry. It's like I've been at the highest levels of Wall Street, run billion-dollar trading businesses and all that. Nothing's more fulfilling than helping one or two people build a great business. So that's why, so spiritually, that's why I'm focused on the early stage. Financially, if you're good at this, you've so much leverage because I'm investing relatively small dollars for very meaningful ownership of a business. And if that business ultimately is successful, then one super successful outcome makes up for 30 crappy outcomes. I mean, that's just the venture math if you have a concentrated approach to seed, which I do. So I'm owning, double digit percentages of the companies in which I'm investing. And then as they demonstrate success, continue to invest along the way. Financially, it can also be wildly successful. But again, coming back to the original comment, Andrew, there's not that many of me in this space. You had said, yeah, there's a ton of downstream capital, right? I mean, you saw Dave Checkett's this $1.2 billion fund, Ryan Smith announcing his $1 billion fund. You've got the pools related to franchises like the Arctoses and the Blue Owls and folks like that. So yes, at this level, sports media entertainment is investable, but only at the very latest stages. To me, it's validating because it's saying you're fishing in the right pond. And sure, there's a lot of money if you're ultimately successful in helping nurture some of these businesses downstream. It's just I'm doing the heavy lifting at the very beginning to create that farm team that could then be potentially investable for that downstream capital.
Yeah, it makes perfect sense, especially as then a lot of them have mandates from 20 to 50 million or wherever they got to come in. And so if you can get them there now, there's all this extra capital flowing to go take them to the next stages. From I don't know if a lot of people realize this or know this, but like Eberg Capital, it's been, at least for now, all your own money. How do you put together an approach for that? And how is it different from a fund structure where, a fund might be like, hey, it's 10 years, we're going to do 25 investments, owning these stakes, this much follow on. How do you view it internally of like, do you build it similarly, or what's the approach or mindset when you came in to do this at the start?
So I will be completely honest. When I started doing this, I did not expect that I was building yet my next career. I viewed it more as kind of large scale angel investing, but not really with the goal of building a business. And then over time, I realized I was building a business and really excited about that. And so if you were to look at my portfolio, Andrew, and the distribution of capital and the follow-on decisions, it looks like a seed stage fund. It looks like I've been investing out of call it a $50 million seed stage fund. But same idea, like literally of like 25 portfolio constituents, 14 concentrated investments. It literally looks exactly like if I had gone out and raised a fund the minute I had left IA to do sports media entertainment. That's what I've done. And, now I'm at the point and the scale and the brand where I'm like, I'm at the point where I'm now seriously considering institutionalizing and raising third-party capital and building it as a business.
Super cool. I guess we've gone 9 minutes so far. For anyone that's listening that doesn't know any of your background, maybe give us 30 seconds, 45 of, even if it's just a few investments you made at IA or, just a high level of like what you've done in the tech investing space before coming to start investing in sports.
Yeah, sure. Before that, 17 years on Wall Street in derivatives and quant trading. So that gave me kind of the entree to tech as somebody that bought a ton of big data tools and technologies. At IA, started late 2009, ran it for 13 years, seeded companies like The Trade Desk, Datadog, Eyes, DigitalOcean, Komodo Health, Kepler, a bunch of really cool companies, 4 IPOs. Those funds were super, super successful. But again, seed stage, super early, applying a strategy similar to what I'm bringing to sports, just in tech.
A lot of people talk about tech's broad. You can go get these IPOs, you can get these situations, and some people will push back and be like, well, is sports big enough? Or can you get large enough market sizes? I'm always curious, Roger, like how you view that or approach it. Like obviously you've been on both sides, so you see it and believe it. I'm curious how you explain that or how you see it or think about it, or if you're still discovering it yourself, because that is, I guess from the non-sports world, you get that pushback sometimes. And I think it's just because they think, oh, there's only 120 big 4 pro sports teams. That's only 120 clients. Like a lot of people view it from that lens. And anyway, I'll.
No, you're totally right. And I think that's the wrong way to look at the industry. I mean, if all you're doing is selling to the largest professional sports teams, that's a shitty market. I mean, even in tech, if it's like, oh, it's going to be heavyweight enterprise sales to these companies, it's a nightmare. Long sales cycles. You might have high ACVs eventually, but oftentimes you have unpaid POCs. It's crappy, right? So ultimately, it's like how do you expand the TAM and think about who is your ultimate customer? And I guess the way I think about it, it's less about sports than it is about fans and live entertainment. And if you look at the fan as the atomic unit, you think, well, so fans are people. What do people do? What do people want? What do people buy? How do people engage? Where do fans want to consume content? With whom? What do they do when they're watching that content? It's on and on and on and on. Sports is a vehicle for organizing fandom around teams and leagues and activities. So if you think about it that way, the TAM is everybody on earth. And then it's what do those people do? And sport writ large, just even look at, well, how many people follow EPL? How many people follow cricket? How much less the NFL or the MLB, whatever. It's massive. So it's kind of like meeting people where they're at, focusing on the fan experience, deepening fan engagement. How do you do that? That sport touches that, but it extends way, way, way beyond that. So that's why I'm kind of like, we're in the first inning of this sports media and entertainment investing game, and people's thoughts around what it actually means and is it venture investable, they're kind of missing the boat, which is exactly why I'm doing what I'm doing and why I've put so many chips into this area.
Yeah, and personal chips too, which I think is always important at whatever level. Why is it taking so long? Like sports have been around for a long time. Why now? Like why is it the first inning now? Like what triggered? Is it betting? Is it media rights? Like what's sort of triggering, or what are some of those igniting factors?
That's a really good question, Andrew. I think it's honestly all those things. I think also COVID was an accelerant. I think it's interesting. It's like in the same way that some of the best businesses were built coming out of the global financial crisis, like those companies that I mentioned at IA that all IPO, those came out of the financial crisis. They were all like 2009, 10, 11 vintages coming out of the 2007 through 2009 GFC. It like people think differently and tap into feelings they didn't know they had in the wake of crises. And I feel like what COVID highlighted was how isolated people feel and how alone that sport and games and social tools are those things that make people feel part of a community. So that's the social element combined with, wow, now I can do live again, right? I can be in person. But now that I've seen the power of, there's a lot I can do when I'm not live, right? I can view live. Don't need to be in stadium. And in fact, I've become more demanding. I want to watch what I want to watch, when I want to watch it, where I want to watch it. And so it's just this mushrooming effect and the fact that I think, you had, I think, properly touched on media rights. Yes, there's been this massive repricing of media rights that reflect a level of engagement and fan value that wasn't fully tapped into. I think part of it is interestingly going away with cord cutting and then being rebuilt in streaming. So it's a really interesting shifting of these tectonic plates. But I think because of all of these different vectors that now affect how a fan feels and can experience sport, it's made the sector that much more exciting, that much more investable, and that much more valuable.
Yeah, I agree. And I also pulled up your portfolios. You guys are, at least you label them across, for right now, 4 things: franchise, betting, entertainment, infrastructure. If you want to sort of go into how you think about the different layers, right? I'll let you go. I won't try to lead you into it, how I was thinking about it. But like, how do you view it from because like teams and leagues and franchises and sportainment, and we'll call them IP, are a little bit different functioning even within sports than some of the tech side or infrastructure as you label it. So I'm curious how you think about it and structure it as well.
Yeah, sure. So I think probably an interesting place to start is with a company whose recent financing was just announced, which is Alt Sports Data. And the reason I picked that is it literally sits at the intersection of those 4 things.
Yeah.
So for those who don't know, it basically started out life is we're going to connect action sports leagues with those who want to bet on them by creating this data collection, this computation and distribution infrastructure to connect these leagues with regulated sports books. And when I got involved with the company, I'm like, that's cool, because I believe in emerging sports and action sports and thinks that will be an increasingly large segment of the overall pie. But then I'm like, there's so much more that we can do for these leagues and for their fans. And we actually control a bunch of the media rights to these leagues as well. And so thinking about kind of this, if you think of the league as an atomic unit and you say, okay, what are all the things that we can do for that league and their fans when they themselves don't necessarily have the expertise or the resources to be able to do it? What they're great at is putting on their sports. And it literally, Alt Sports Data's fandom is in the high hundreds of millions of fans across the 25 leagues that they currently service, but really being this one-stop shop for leagues and their fans to be able to watch sports where they want to watch them, bet on them, get stories and updates in real time on them, and to feel part of this community. And so that, to me, touches on all of these mega trends that you and I just talked about, which is people want to see their favorite athletes in whatever sports they are. And we've seen this kind of fragmentation of attention where it's not just about the big four leagues. There's all these other interests that people have. No, in the Venn diagram, there's overlaps. It's not like, oh, because I love World Surf League, I don't love the NFL. I may love both, but I really love World Surf League. And I want to be able to watch those tournaments, and I want to be able to bet on those people, and I want to be able to get updates on how they're doing. And ASD has now provided this infrastructure to be able to do that. And then at the same time, so it's like, well, where might I want to watch these sports? We've also seen a fragmentation of media rights, right? So like Alt Sports Data now is the exclusive betting partner of Formula One. Like what? We do World Surf League and Formula One, but Formula One literally, segments their rights in a variety of different ways. And we have one company, Alt Sports Data, that's the exclusive betting partner. Then we have a sports fast channel distribution company, T15 Studios, that has the rights to a segment of F1's media rights. So with this kind of deconstruction of the rights landscape, and again, with that theme of tapping into these different pockets of fandom and meeting them where they are, the leagues themselves are accruing value and the fans themselves are getting what they want, which is this flexibility to view, game, be social, where they want to do it when they want to do it.
You've done 28 investments. I was just counting them while you were finishing up there on your website, at least publicly. So let's just call that like a fun one, even though it's all personal. What's getting you excited now, Roger? What's where you're going? Okay, we've learned. I'm sure you've been like, maybe that was a mistake, or, hey, these are going great. What's getting you excited now? Where are you looking? Where are you like, all right, I'm ready to run with my own capital, with maybe third party, wherever you end up taking from an institution lens. But what's getting you excited as you progress from even your inning one to your inning two?
Sure. I consider to look at selectively emerging sports. I think emerging sports will continue to be on the rise. It's getting, you need to be really, I think, hyper disciplined about those that are able to monetize as opposed to just something that's more campy, more of a project. Have spent a bunch of time in and around women's sports and think that kind of convergence play and attention between men's sports and women's sports is going to continue. And, that's also both on the venture side, but also on the franchise side. We're a significant part of the group that's looking to bring a WNBA team to Detroit. Very excited about that, as well as an NWSL team. Then technology that bridges pro sports and recreational sports. I've seen kind of like call it a skilled recreation becoming a much bigger thing. So whether it's fitness or driving or golf, I mean, literally just like the rise of people who are more than pure recreation that want to actively work on their sport, but there aren't great tools to be able to do that. We've seen some really, really interesting companies coming out of that space. And that's where you kind of start to also see the intersection of live sport, professional, and gaming kind of all affect how fans think about, well, I can do this. And then, okay, if I want to try that, well, how do I train myself to be good enough to get a car on a track and actually be competent? Part of how you do that is through simulators and the way that F1 drivers simulate. They're not spending all of their time on the track. They're spending a lot of time literally playing games. So anyway, I think that's a huge area. And then the last thing I'll say, because I could go on, is this notion of kind of the IP around four-wall experience, where we were part of the group that did Pool House, I think is super, super interesting, where it's bringing just a much richer, more immersive experience to games that you can do in a four-wall experience, which has hospitality and it's a, fun vibes and whatever, but where you're not necessarily owning all the real estate and stuff, but you own the IP to what makes those games exciting and ultimately bettable.
To the founder lens real quick, like we talked about from market idea, when you look at then the team or the founders, what's then getting you excited there on the flip? Because obviously I'm assuming it's a combo of, market idea, great, and then also, are these the right people to do it?
I mean, it's always founder first. It has to be. Somebody can have a great vision, but unless you feel great about them as people and as builders, you can't do it. And let me tell you, earlier in my venture career, I made that mistake all the time. You think, well, this idea is so good and the space is so attractive that it'll compensate for a B plus founder, not an A founder. It never works. And I don't mean most of the time. 0% of the time does that work. No quality of market, seeming quality of opportunity can overcome anything less than stellar execution. It's all about execution. So and I think this is why, and you see this a lot in tech, and there's been a lot written about this. If you find great founders, they could have a stupid idea. Stay close to those founders. They will eventually find a good idea, or you help work with them to get a great idea. But great builders, great recruiters, great storytellers, great shippers of product, like that's it. It's all about execution.
How do you uncover that in whether they're Zoom calls for an hour or in-person meetings? Like, how do you, what makes you go, that's a good one? Like, they might not have the right idea now, but like, I'm sure you have that third sense now. It might even be hard to explain. You just sort of know because you've done it for a while, but like, what is that from, or, tangibles, just from the people lens, because people game is much different than the product game.
Yeah, I mean, honestly, that's like a whole separate podcast. I could talk about that for a long time, but I guess super quick. So I think one clear indicator that we found, we talk about this at IA all the time. People that have done something exceptional in their lives, and it doesn't have to have anything to do with their idea. There's just something about people that have the drive to be exceptional that seemingly correlates with being a great founder. There's just something about the spirit, the grit, the drive, the energy that you need, even in the best of circumstances, to be a successful founder. If you've exhibited that in another part of your life at a different time, that's a really good tell.
I like that. All right, we'll keep it at this, and then we'll, as you go to your next progression, we'll bring you back on at some point. But appreciate you coming on, Roger. Where can people learn more about Eberg? What is website, socials? Where's the easiest place for people to get info, and then reach out if they want to submit their pitch or idea or whatever?
Yeah. So ebergcapital.com, we're all out there. At Eberg Capital on Twitter. I'm on LinkedIn.
Easy.
Just come find me.
Yeah, just gotta not be an Ohio State fan. Do you back any Ohio? Have you backed any Ohio State fans?
I have.
Yeah.
Here's my view. Ohio State fans are people too. They're still my little brother. It's okay.
Fair. I like that.